Alright, LoanTech is a great company for you, an originator to work with, because first of all, if you're getting any type of online leads, they're going to help you organize these leads. They're going to do a lot of the heavy lifting so you can convert them into more buyers. Furthermore, they have an accurate online pricing widget that you can go ahead and use as well. Now this is a big one, guys, because it's accurate, and if you're not out there quoting rates right now, maybe you should. If you want to learn more about it, how your business can get better, click this banner right over there. Okay, so I saw this headline a couple of days ago in the Orange County Register, so take it with a grain of salt, and I haven't seen it anywhere else. Fannie to offer a no credit score mortgage? If so, I guess that's kind of bold. Well, anyways, here's the details.
Okay, it's a 90 LTV purchase up to $417,000, a verification of rent, and an additional alt credit source covering at least 12 months is required. Fannie then prices to their lowest credit score bucket, which will add 5/8 to the rate. Further, if you're to believe the article, Radian and Arch will insure these loans, nobody else at this point. And one would assume that the pricing for the insurance, it's gonna be a little costly too.
Okay, so we found a no-score loan guideline book from Fannie Mae that was published March 29th, 2016. And some of these guidelines are 1 unit, primary residence, purchase only, no self-employment, and max DTI at 36. The thing is, we're not sure if this is, outside of the home-ready loans that are already out there or any other Fannie offerings. Because I think if Fannie was coming out with something new, a no credit score type of loan, there'd be more talk about it than there is right now. And truthfully though, even if Fannie does come out with some new no score loan, or even a low score loan, or hell, even a 100% LTV loan to self-employed people, whatever, would any lender actually fund these things? Probably not. A few, if any. And that, not new programs intended to stretch guidelines, is the crux of the mortgage industry today.
A U.S. House committee is going to hold hearings of the CFPB's proposed arbitration rules soon. And then the next line in the title of the story should read, "And they'll do nothing about it," because they won't. Just saber rattling as usual. We've seen this before.
Now, you may recall the CFPB has ruled that the CFPB has ruled arbitration in consumer contracts is wrong, even though every judge up until this point has said, they're okay. But you see, the CFPB is smarter and more powerful than any court in our land. They can take existing law and just throw it out the window whenever they want to. And they do. And so far, nobody's done anything about it. So, unless something changes, why would we think anything different with yet another committee hearing?
Okay, so by scrapping arbitration, the CFPB's opened the door for lawsuits. More importantly, class action lawsuits. So here's how it goes.
Okay, so right now you have a dispute with, say, your credit card company. Maybe the interest rate is a little wrong, or the payment, or you're just super pissed because you think you've been wrong. Now, when you got the card, you signed something that said, in the event of a difference of opinion here, you agree to allow an arbiter to hear your gripe. Now, you get to go and gripe, and then the credit card company gets to gripe, and then an arbitrator says, here's the solution, and that's binding, and then you're done.
Because after all, you may not like it, because it may just be you. You may be the a-hole, not the credit card company. The consumer isn't always right. Sorry, Charlie. It's true. I've worked in the food service industry before, man, and I served a lot of lemon meringue pies to a bunch of a-holes, believe me. Okay, so now the CFPB says, no. The consumer can indeed now sue the credit provider.
Aha! And this, my friends, is where it gets interesting. And we've said this, maybe this isn't such a bad idea. But let's think about it here for a second, can we? Okay, so going back to the story Frank just told you. You have a gripe with your credit card provider over a payment. Are you going to hire a lawyer and put them on retainers, which means you're out of pocket thousands of dollars to fight a credit card company who has better lawyers than the ones you just hired to go fight a payment dispute? The answer is no. The arbitration's looking like a better idea now, isn't it?
But here's what happens. When the CFPB said consumers can now sue, a whole army of attorneys perked up their ears and said, "Oh really? This is interesting." And then they start looking for you, the guy who had a gripe but didn't sue because it didn't make sense. And now they contact you and say, "Hey, you were screwed. Sign this paper and I'll sue the bank and get you money back." And then you say, "Okay." And then the lawyer sends that same letter to everyone else that had a credit card and says, "You might have been screwed, even if you don't know it. So sign this and I'll get you money." And everyone says, "Free money? Okay. I hate the idea that I might have been screwed, even if I don't know. And after all, it's free money. And today's culture likes free money."
Right, baby, I just bought this truck straight cash. And I got enough cigarettes to last me and my family for the rest of our lives. I'm rich, bitch!
And then the lawyer goes to the credit card company and says, "I'm gonna sue you for $1 billion. And the credit card company says, "We didn't do anything wrong, but what if they win? That's a lot of money." So the credit card company goes back to the lawyer and says, "Would you take maybe 200 million? And the lawyers say, "Bang! Hell yeah!" That seems a little low for all of my suffering clients, but we'll make it work out." And then all of you get a check in the mail for $9. And the attorney walks away with $100 million because when the consumer signed that piece of paper way back when, in the fine print it said the lawyer gets half of everybody's $9. So that's how it's going to go now because of the CFPB.
And now a House committee's gonna hold a hearing. They're gonna hem and haw, and then do nothing.
You know, half the people who work for the CFPB are lawyers. How many of those people do you think are going to jump ship from the CFPB and start suing these banks?
Yeah,
I'll
why
bet you this is an inside gig.
Oh man, maybe, who knows. Anyway, what are your thoughts on it down below on everything? Even that Fannie Mae deal. Kind of interesting.
I would like to hear more about that.
Give us your comments down below. Forward and share, subscribe for free in your upper right hand corner. Don't forget about Loan Tech. That banner that you click over there has a pre-recorded webinar laying out everything they do, which is completely awesome. That, you guys have a great day. We'll catch you tomorrow here at the National Real Estate Post.
Enjoy your weekend.
Bye.